All right, welcome everybody. It's Thursday, November 7th, 2024, 2 days after the election and Fed Day today. So FOMC comes out today. We're going to see what they're going to do. The expectation right now is almost 100% that they would cut 25 basis points. That's the prediction. Whether that's correct or not, I guess we're going to find out. We are at 98.8% chance of a cut today, which is pretty good from an odds standpoint. So 98.8. I don't know what your normal temperature is. It 98.7 or something? I don't know. Or zero point 0.6. I don't even know what normal human temperature is, but there's where we are. So we're in good shape there. Hopefully the Fed comes out, cuts. What we really don't want to hear necessarily, which could be the ringer this afternoon, is does the Fed give any guidance? Just like earnings, okay, I'm not as interested in beating analyst expectations, which is why stocks, I don't care if they go up or down after earnings, okay? They're beating some random person's expectations. Most of these analysts are knuckleheads, in my opinion. Most of these analysts on Wall Street if somebody comes out with good earnings, then they up their guidance for the rest of the year. Well, anybody could do that after earnings. These guys are terrible at predicting actually what's going to happen. So analyst expectations don't hold a ton of water for me. If I'm evaluating a company, I don't even look at the analyst expectations. All I look at is their revenue consistently rising quarter over quarter? Are their earnings rising? Are their earnings per share potentially rising? Meaning, and is it because they're doing buybacks or what have you? But are their earnings rising? Are their revenues rising? How do they weather downturns in the economy? Things like COVID and the banking crisis of 2008 or the bear market in 2022. How do these stocks bounce back from those types of events? I think if you look at those and you find those top companies, and I also want to see companies that have little to no debt at all. So I want to see very little debt, and I would prefer to see a company buying back shares versus issuing a dividend. I don't like dividends. I think it's a terrible practice by a company. If I had my own company, I would probably never do that. It's reinvest in your company. And this goes for all of you out there that are trading and investing here. The power of compounding is the most magical thing on planet Earth. Okay? It is the number one wonder of the world, in my opinion. Okay, not the pyramids of Giza, not the Sphinx, not the Eiffel Tower, not the Taj Mahal, not the Grand Canyon. The number one wonder of the world, in my opinion, is the power of compounding, which means you take all of your gains and you reinvest them back into your portfolio and you let it continue to compound and grow. Don't pull money out, which is why I don't love people giving up necessarily their day job or their income streams to go trade for a living. Okay. Well, you're going to stop your $100,000 a year job so that you can then cut your trading down by 100. I want the $100,000 of income on top of the $100,000 in gains in my trading account, and I'm going to keep plowing more income into that account so it can keep compounding, and eventually we get to a big enough account. But if you want to be a professional trader, I don't really think you should be doing it on anything less than $500,000 to $1 million at a minimum, or something like that. And I love all of these YouTube videos of people retire on 250 or retire on $500,000 or retire on $250,000. Why? Because you're going to use the wheel strategy to make enough to make 10 grand a month or something. It sounds crazy to me. But anyway, I digress. I won't keep going through all of that. But same thing with companies out there. I want to see them reinvest their earnings back into R&D, AI, automation, anything that can make that company more profitable, buying businesses, buying other things. That's where I want it to go, as opposed to paying a dividend to shareholders out there. If I was a shareholder, I wouldn't want the dividend. I want you to be better. This was the whole reason behind Amazon for years. They were willing to just lose money, lose money, lose money. They weren't going to pay a dividend. Most of these tech stocks don't like paying a dividend. Just sometimes by paying a small, meager, useless dividend, they can get put into certain ETFs. I get that, which means more people will buy the shares, which can inflate the stock price. I get all of that. But long story short, same thing with the Fed here. Uh, as we're looking at this, let's see if they cut rates. And again, I want to see what the guidance is. So for me, it's those couple earnings pieces that they come out with, not whether they beat or you know can't hit some lofty analyst expectations. If you're making more money and you're making more revenue and you're a good company, then I'm buying you. Okay? I'm going to look to see if I can buy it at a discount, which is all about what we do in the lazy trader account. And to an extent, it's what we're doing here in the income navigator account is we're trying to buy assets by selling puts at a price significantly below where they're trading currently, that even if they go down, we still could win. Okay? But also, we're willing to potentially own those stocks or those futures or something at a great price that's overvalued. Now, the market's rocketed 2 days in a row. We're up another 30 some odd points today. So let's get into it and we'll take a look. But the market's up significantly again today. Are we overbought? Are we overvalued after the election? Well, if you thought we weren't before, we might be now. And if you thought we were overvalued before, and we're definitely getting there now. We're definitely there now. So if we're looking at the weekly chart here, gigantic week to the upside after 2 weeks to the downside. Looked like things might be starting to roll over. And then the election happened. And let me get off the screen. Then the election happened. Trump became the winner. Okay, it looks like they gained the Senate. The House is still up for grabs, which is very interesting here. So the House hasn't been settled yet, but possibly could go to the Republicans as well or stay there. So we'll see what happens. It's great if you're all in on the Republican side or the Trump side. And again, I'm not going to take sides politically here, that if you own everything of both sides, that's great. But there are no more checks and balances. So whatever they want to do, if they win the House and the Senate, good or bad, I'm very nervous about tariffs. I agree with punishing the daylights out of China. I agree with trying to keep all the manufacturing in the U.S. and making it more appetizing for U.S. companies to build in the U.S. I'm very pro-business, very pro-U.S. I want the U.S. to rock and roll. I want everyone to have their businesses in the U.S., not building in China and Mexico and Canada or anywhere else. Build them in the U.S., employ American workers, put the American people to work, and you know everybody prospers that way. However, I get going overseas a bit, but I don't want to get to the point where if we create too many tariffs on imported goods that we cause inflation to start to get out of control. Uh, Here and in everything that we want to do, Democrats and Republicans, costs money, and this debt is completely bananas. Anyway, I don't want to get political, so I'll stick away from that. But that's why I think bonds have suffered a little bit recently. There's people thinking, oh, well, if we're going to see uh, continued inflation, the Fed's not going to keep cutting. Well, they're going to cut today, most likely, and it looks like there's a pretty good chance of the Fed cutting in December as well. So the December timeframe, we're looking at a 70% chance of a Fed cut. That 70% chance of the Fed cut is actually down from a week ago. A week ago it was at 75% in December. Now it's at 70%. So we'll see. It's still a good odds that the Fed will cut not only 25 here and then again another 25, but that's yet to be seen completely. All right. So there's the little election piece. But if your candidate didn't win, I get it. The candidate won, I get it. But at this point, either way, the markets typically win over time, and I'm looking to continue to keep winning here. So ES bumping up. It's up at the top of this trend line that we've been seeing here. It would not surprise me to see if we have a couple day pullback. I was a little surprised on today's follow through. I don't know if we end that way today, but otherwise, that's just fine. If we break through it to the upside, we are just getting into overbought territory, but we can stay there and continue to move higher on ES. I hate having to want to put on trades today after two gigantic up days like this. I think we rally more. I think 6,000 is definitely happening. I don't know if it'll happen today on the SPX. On the ES, we did, but on the SPX, futures are not. Um, we're not that high yet. We're at 59.64. So there's still some upside to go to get to 6,000. I think it's a magnet. I think we're going there. Question is, do we surpass that and get a whole lot higher? Things still look good on the weekly chart. All right, let's go quickly through some of these things. Oil, because I want to come up with some trade ideas. So ES to me is a little bit overdone. It's a nice Trump pump that we got the last 2 days. Does it continue? There was obviously a ton of cash sitting on the sidelines, which means I think more cash could come in. So ES can go higher. It's just going to start to get overextended. You just stay bullish, but cautious. Uh, and if you're losing a bunch of your hedges and everything else, that's exactly what markets are going to do to you on purpose. Is they're going to drain your hedges to zero. The market's going to go up. You're going to not put a new hedge on, and that's when the market's going to get you. Okay. So as soon as you think, you know what, I don't really need hedges. The market's just going up. It's going to keep going up. Tom Lee says it's going up. Uh, I don't want to put out there. Cash on the sidelines, Chuck. I can see if I can pull that up. I don't know if I can get to it while we're on here, but there are a couple uh, fund managers that do track that. I think Tom Lee was even talking about the amount of cash that was on the sidelines being pretty significant. Plus, you've got people unwinding the recent put trades that they're in. So not only there's a little bit of short covering on this rally as well. People were not betting that the markets would tank, but they certainly were putting on protection, just like all of you that had hedges. Okay. They're going to want to unwind those hedges potentially because the market keeps going higher. And if they bought puts, they're losing money. So they've got to buy those. They've got to close those puts and they're maybe putting it back into the calls or something. So there's going to be that rotation and a little bit of a short covering rally here. So if we're looking at oil as well, it's moved up nicely heading into the election. Pretty unchanged yesterday, down a fraction today. I think the big thing on ES2 is, the VIX. The VIX went into the toilet. So it went from a 20 on Tuesday. It dropped to 16 yesterday and it's down to 15 today. So the VIX, all of the volatility has come out, which has really helped most of the options positions that we're in. So VIX dropping, the volatility of the VIX, I mean, the bottom just dropped out. It's all the way back to the lows again, dating all the way back to July. So all that vol came out. Oil. So would we want to put a trade on in oil right now? Here, I still think yes. I still think this is a really, really good strangle setup on oil. So if I'm looking at oil, I'm looking at strangles. I'm potentially looking at maybe even put credit spreads or naked puts. Oil looks fairly bullish on the daily still. And on the weekly, things have been improving nicely and not just a crazy rebound. I mean, it ran up, a lot of volatility. Volatility has come out of oil significantly too. We can see oil volatility has dropped from 54 to 43, so about a 20% drop in vol over the last month or so. So oil volatility dropping, IVR on oil now, is down to um, but 60 now. Still an elevated though, so still good volatility. Oil still is a good trade. I think you can still do 112s puts on that. Bonds, you know, was in this tight box, fell out of the bed yesterday. It's rebounded half of that back today. So we've regained half of that, bouncing off this support area here about 115. Is that it? Does it hold? Who knows? We're still in a bearish PSAR downtrend. Uh, we were bullish for a day, and then we flipped it back um, today to bearish. But stochastic momentum's climbing. Everything still looks decent from a bond standpoint, from an oversold standpoint, and trying to move, even though we're moving lower on the daily. The weekly still says things aren't great. We could go down more, but we are really running into a ton of support levels here. Nothing that we're going to do radically. We will be rolling out some bonds here. I don't know if we'll do it today, but I just keep closing call side trades for winners. And then we'll again eventually get these rolled, so I'm not super concerned about that. Gold falling out of bed. This was the flight to safety trade. Gave up a bit here. The US dollar ran up hard yesterday, is pulling back hard today, which is helping bonds. It's also um, helping everything else out. Nice bounce off the 50-day moving average. Just a nice pullback on gold. I don't think it's the worst trade out there. I think gold still a tad overbought. I just want a little bit more consolidation, but I think if you want to trade, maybe a put credit spread in here, I don't think it's the worst play, but I'm probably going to give it a little bit more time myself. Copper, big sell-off yesterday, which was, to me, an awesome opportunity. I'm still very bullish on copper. If I'm looking at the weekly charts, I think they look pretty good on this uptrend that we have on copper. We've been in this volatility zone. Just a big move down yesterday, and then erasing all of that today. I think we just drift sideways a bit, but I don't think this is a bad spot, in my opinion, to get in on some copper trades. I still would be looking at copper for some kind of maybe a put credit spread or something along those lines. I think these are good opportunities. All right. Uh, do, do, silver, kind of in the same boat. Still, I wasn't a big fan of silver previously. It's been heading lower, and nothing's changed in my opinion. I'm not super bullish on that. The Aussie dollar, we're just waiting till the election's over here. We'll be watching the US dollar. I think right where it is here is a really good strangle setup. So I think 6A is back to a really good strangle setup. I'd like to get back into setting some strangles, so we'll even look at maybe adding something in here today. The euro, it's not bad either, but I think the Aussie dollar is a better look in here. On the NASDAQ, overall, finally, a new all-time high this week, today. Okay, so, well, yesterday and today. So we're finally, with today's move on the futures, new all-time high. It was trailing significantly the S&P in that category. Now it's breaking out of this trend. Will S&P follow on the breakout of the rising wedge? We'll see. Nothing for me to do here. I think it's just bullish. If you want to do something on NASDAQ, if you want to put on a 112, I don't think it's the worst trade in the world. You can usually get some pretty good put debit spreads, pretty wide. You can get pretty good, pretty decent away. I like the NASDAQ potentially. If you want to throw some short term, like 112 trades on, I think that would set up well. And then small caps, we busted out of this volatility zone that we were in. We've been talking about it. We made the break yesterday. They're over, the Bollinger Band. They're over the 3 ATR, so they may have gotten a little bit ahead of themselves. I think we watch for a pullback down to this previous resistance level here. Any pullback into this 2,300 is another opportunity, I think. I'm just not chasing. I'm just not chasing them here. So if you're not in it, it's not something for me on futures. Let's see. Let's do just a little bit of stock work, and then we'll get into trades because we got a bunch of trade stuff to do today. So ES, not bad. I don't know if I want to chase a whole lot of stuff. I will still maybe put on a calendar 112 here. I might wait till the Fed comes out this afternoon to put that trade on, but everything else I'll probably trade in here. Again, I don't think the Fed's going to surprise, but I want to hear what they have to say. It's the guidance, just like stocks. It's revenue, earnings, and guidance that's most important. And for the Fed, it's really all about the move, but the guidance is key. Apple getting a pretty nice bounce. I don't like it. I don't like Apple. Warren Buffett has been unloading it like crazy as well. I just don't love it in here either. Yes, they got a little dividend coming up. It's a little 25-cent dividend. Nothing to do here. Is it overdone? If you like Apple, I think this is a spot to get in. Okay, so if you like Apple, I think it's not a bad spot, dropping below the 50, hitting off this Bollinger Band and moving up. If you want to add some more, I think you could potentially sell Apple like leaps or something like that. You get a nice pullback. Apple doesn't look fantastic. Same thing with Microsoft. I think it's a good opportunity in here for a swing trade. I would look at swing trades on Apple and Microsoft, maybe put credit spreads, something like that. I think both of these are set up well for short term. I think longer term, the weekly charts really don't look. I mean, you might have a nice base coming in Microsoft, which is better. Apple, I don't like it at all. Really, Amazon is probably one of my favorites. Now, this thing is off and running. It's just really hard to chase stuff here. I'm not a big FOMO guy, so it's not creating FOMO for me. But I really wanted to be long in Amazon, but the election was in the way, and I didn't want to take that opportunity. Probably should have. I wanted to sell leaps on it. I can still look at leaps on Amazon, but Amazon is one of my top three picks. So I like Amazon. Meta doing very well here. I mean, Amazon, though, cranking to new all-time highs. This is the best looking of them all, and I wish I was in it. I'm not. Meta looks okay. In here, Google is one of my favorites. Big moves here. We're almost back to the gap up that we had on earnings. It's not overdone exactly on the weekly. It's getting a little overdone on the daily. Any kind of a pullback here on Google, I think, is an opportunity. So again, if I'm looking at stuff for the lazy trader, it's Amazon, it's Google, and it's Nvidia. Now, Nvidia does have earnings coming up on the 20th. We still have 3 weeks before earnings. This thing's running. As always, we're in it. We're getting close to closing for 90% winner on our leaps already in here. We'll reestablish and put some more on. I just don't think it makes as much sense to chase into earnings, but let's see what happens. Tesla, absolutely just cranking to the upside with the Trump win. Elon Musk going to get some help as well from Trump, most likely. So you've got Tesla just cranking to the upside. I loved the stock anyway. From an overall standpoint, I don't love it here at 297. You are overbought on the daily. With everything being overbought here, I'm looking for pullbacks before I want to get long on anything. Netflix, new all-time highs. I mean, you've got new all-time highs starting to shape up all over the board here. Costco, one of my favorites. I love this company. Okay? Love Costco. I think it's fantastic. Okay? I think you are just starting to break out of this range. I think Costco here is a good place to get in. I don't think Trump or Harris help or hurt this thing. But if you think you're going to be better off and have less taxes, more discretionary income, less inflation. If you believe that that's the case, then you would think more people are going to go to Costco and start spending that discretionary cash. So it's moving higher. So Amazon, Costco, Tesla, all of those to me, consumer discretionary type stocks. Palantir, you can see the effects of getting overextended. This thing is bananas to me. I'm not touching it in here. We do have a trade on, but I'm not adding any new trades on Palantir. And then Salesforce, I like this company as well. It's getting overbought. Just too many stocks overbought on the near term. So I would be a little more cautious on those. And then I want to keep looking at energy type stocks like CEG and BEP. Okay. Keep an eye on these energy stocks. I think Brookfield here is a really good setup. Potentially, we got to see what happens with earnings tomorrow. So earnings tomorrow morning. I already called it the other day. I said Boeing I liked with the machinist uh, ending that strike on Monday. Okay, then it sold off for 2 days. Now you're getting a little bit of a bounce. I like it here. This is a nice falling wedge pattern. I think Boeing's going to get its act together. Momentum's been down. I think you're getting the opportunity to sell leaps on this thing. I don't know that I want to own it, but I think if you want to trade it, it's not a bad trade opportunity. I also think Merck is not a bad trade opportunity. I don't know what's going to happen with healthcare, but I think it's something to watch. And then we won't go through all of these, but these are all stochastic momentum oversold stocks right now that are great setups for put credit spreads if you're into like the active trader type of a thing where I'm going to put this on for 14 to 30 DTE swing trades. Apple's a good one. AMD is a great one. Okay. ARM is a great one. I like ARM. We had the earnings that came out yesterday. They smoked it on earnings. It's up nicely today. I am a big fan of ARM. It's one of my favorites. I'd even consider a leap on this thing as well. So I do like ARM. This is also a fantastic swing trade if you're not in it. Um, ASML, also a great swing trade. Boeing, good swing trade. BABA, great trade, swing trade here. Baidu, great swing trade here. I mean, you guys can go through these if you want me to pop a list. If you have any interest, I can pop this somewhere in the Discord. Chipotle, we're in this for a poor man's covered call in the small account. I think this is a great area to get into Chipotle. Home Depot, I think is a swing trade. Lowe's, swing trade. McDonald's, swing trade. Meta, Microsoft, Newmont Mining in here. And then if we look at all of the indexes, okay, biotechs, XLP is your consumer staples, utilities, XLU, and then XLV, healthcare, interesting opportunities uh, in here. So anyway, I just want to go through those stocks. Let's move on to the accounts for you, but I'll give you guys that list. Oh, MicroStrategy, where are we on that one? I love me Bitcoin. I'm very bullish on Bitcoin. MicroStrategy came down, gave you a little bit of an opportunity here. It's back off to the races. This weekly chart, just crazy to the upside. In the lazy trader account, we closed some for winners. We're at 73% on a trade here that is nowhere near our strikes. IV is still good. I think we can go higher, but I think you've got to watch what's going on in Bitcoin. Bitcoin, monstrous up day yesterday. Just hanging in there today. It's a bit overdone. It's at the Bollinger Bands. I think if you want, you give it a little bit of a breather. But I thought this thing was going to 80. It got to 77. Okay, so I'm not right yet, but I also think we could see 100 on this thing by the middle of next year or so. Trump pretty pro Bitcoin as well. I think that's helpful. Coin also, it certainly reversed its fortunes. So I think MicroStrategy looks good. It's just so many stocks that are getting over a little overbought here. It's a little too much, too fast for me. I'm a big chicken when it comes to this stuff, so it makes me a tad nervous to watch some of these things play out. All right, let's get into the account. I think it's better to be a chicken than to be a pig. So let's get to new news that Britain might be buying a lot of Bitcoin. Everyone's going to buy a lot of Bitcoin. If Trump's going to start a strategic Bitcoin reserve, just like the strategic petroleum reserve, it's going to put a bid under it. And I think you're going to see other countries follow through. Do I trade BTC futures? I do not, but I do trade. I have traded Bitcoin through Tasty Trade, but I just prefer MicroStrategy. Okay. I just like MicroStrategy. I just keep playing that. I just keep winning on that thing. I think it's a great way to play it. But if you want to own your own Bitcoin too, I consider going to Coinbase or somewhere, opening a wallet, start purchasing Bitcoin. But you're looking at $80,000 now for some Bitcoin. But you can get in on it. I just play it through the proxy through MicroStrategy. All right, let's move to the account because we've got a bunch of things to get done today. So, good day overall. You can see bonds for me up about $10,000 on the bond side, which is a nice thing today. It's not really going to affect anything that I'm doing, but I love the fact that it's up. That's certainly helpful. All right, oil. So what do we got in oil? Do we need to do anything? We've got a put credit spread on oil. That thing's up 25% in 6 days. Nothing to do there. We'll wait till it gets over 50% to deal with it. We got a strangle. That strangle's down 140 bucks. This is a frustrating strangle. We're still sitting dead center of this strangle, but due to the call side skew, which we discussed skew the other day, I think it's interesting to um, to look at. It's just frustrating me. I've been in this for 44 days, and we haven't moved anywhere on 44 days, and I'm still have no profit on it. I think it'll just release pretty soon. IVR is at 62 up here. I think that sets us up that this thing will just all of a sudden one day we're going to wake up and this thing will be at 50% quickly. So I'm not worried about that. We've got a 112 trade. The naked puts are at 64. Nothing to do on that. And then we have a leftover put debit spread from a 112 that we already took profits on. There's nothing in here. We don't have a ton of capital right now invested in oil. You can see $36,000 of our $350,000 account is in oil. So we could put oil trades on. Let's see. I gotta mute somebody here. Peter, we gotta mute you. All right. All right. So ES, I have a measly $7,000 in capital being used for ES, which is pathetically low. Why? Well, let's see what we got here. We've got put debit spread. We've got a 111 that's at 73%. Nothing to close there yet. We've got another FB 500 wide calendar. Okay, that thing is sitting there as a hedge. We've got this vol hedge, which the shorts are at 66% because I couldn't trade yesterday on the road. So we're going to fix this one today. We've also had in the fly hedge, I'd already had a 50% profit, take profit, good till canceled sitting there. So this thing will come off. Or we got to put it came off automatically overnight yesterday. We'll put that back on. Then we have this vol hedge here, which spans two different expirations. We're at 57% on the short, so we got to fix that one today too. We've also got this calendar put debit spread left from a trade. So nothing to do. Well, I shouldn't say nothing to do. We've got these vol hedges that we have to fix today. So we're going to do vol hedge work today. get those squared away. And then we have another calendar put debit spread. So we are in great shape with the put debit spreads. And then what do we got? Um, in the new cycles, we've got a put debit spread that's about to come off, another put debit spread on a previous 112 that's about to come off in 22 days. These are still providing us with uh, nice Vega hedges, and you can see that these are providing really positive Vega for us, along with all of these that are providing positive Vega all the way down the line, uh, except for the vol hedges. But these PDSs, I mean, this one's got 130, and this one's got 97. So really good Vega hedging with all of these put debit spreads that are sitting out here. I don't have anything to close except this. This is at 88% on this 111. I'm not going to close it. I want my 90%, so we'll be greedy for another couple days or so. It might take longer. We're so close. 90%. I don't know. We'll have to see. Maybe we close this thing and take that money to do something else. And then we're sitting on the calendarized naked put. This thing has 28 days left. It was initially like a 45-day calendar 112. So that thing's at 75%. So we won't do anything on that yet, but we're under 28 days. So I'm expecting, unless the market turns around and just tanks hard, this will still come off at some point. But we're in really, really good shape. And then bonds, you guys know my bonds, I think, but I got a naked put up here. This thing's down 2,400, but 110%. That's it on these bonds. They're still at 114. They're fine. There's 50 days left. Some naked puts that we had rolled here. These things are pretty much just flat, slightly down. We have a call credit spread sitting at 50%. I see no reason to take it off right now at 50. I might as well go a little bit longer and make another couple $100. I can keep putting as many of these on as I want. And on a move, if we get another big update move, we can't get two moves in bonds back to back. That's been the bond thing. I think last week we had Monday. So Monday, Tuesday, we had two back-to-back green candle days. But we haven't had that for a couple weeks until this week. If we get another green candle day tomorrow on bonds, then I will consider doing some work on the call sides again. This naked call here is up 70%, so I'm checking on another $750 here. This one's at 80% for $1,200. So I got between these trades, there's $2,500 in cash that's ready to come off on just the call side. So I don't mind keep making $2,500 on bonds while I'm waiting for these things. These are the two troublemakers. Okay, they're down pretty good overall. Okay. If we get another big bounce, you got some opportunities for some of you. If you get very back to even, you could potentially close out. Okay. If we can break 117 in the next 15 days, this thing could technically expire for complete full profit. So we'll be watching that. We're so close right now. And then this one obviously is the in the money. This is the problem child to keep an eye on. And all we'll do is roll this out when that time comes. In the meantime, we'll just kind of hang tight. It wouldn't be the worst thing to roll this out. Do we have, at 116 to 121, we almost have all the extrinsic out of this thing. So there's almost no extrinsic value left. A couple $100. Okay, $400 worth of extrinsic value in this thing. We could potentially roll this today. If we roll it into this here, then we could add some naked calls to it at the same time. Very enticing to roll this today. If I rolled it to December, you take in a nice little credit. If you want to eat a little cash that we're making on the calls, we could close some of the calls, roll this out and down for a debit, and use the profit on one of those call trades. We'll actually just close the call trade yesterday, and that was the whole reason for these call trades. It gives you some other options. On bonds, I made $1,100 yesterday on naked calls. So you could take that 1,100 bucks that I just made, and I could roll this for a debit and roll it down to 120. I don't know if that's really worth it or not, but um, certainly you have options. So we do have options on this trade to roll out. One thing I did take a look at is that we do have 15 days. What if we went out 15 days and we wanted to write, we have 8 contracts and 3. So we have 11 contracts. Not great, but we could probably go up here to about the 121 range. If 121 gets hit, okay, that means these things become completely whole. Okay. Now we would obviously be losing on this one a tad, but 121, if we could get 7 ticks on this thing on 11 contracts, okay, we could take in another 1,200 bucks over the next 15 days, and bonds would have to go up 4 points. Doesn't mean bonds can't do that. Okay, we could also lighten this up to maybe 8 contracts, make 800 bucks while we wait. If we get to 122s, this is enticing to me. Potentially write these. There's absolutely no buying power for me to make $625 more on bonds. So again, we have options on bonds to do something. I don't know that I'm going to do anything yet. Okay, but you have options. Okay, nice update today. We'll see if we get no follow through tomorrow, then maybe I will write something for us. So we'll keep an eye on bonds, see what happens later today. All right, let's go in and fix these vol hedges. So the first one is the regenerating fly hedge. Okay, this one we just had our naked puts stopped out on. So what we want to do, we'd already rolled this once, so now we're going to roll some more here on these, and we want to buy more puts at the 120 day on ES. So I want to buy puts at 120 days. We have 133 or 113. Look at the 113. Vol's down today to nothing, so it's probably pretty expensive. I could buy the $5 strike-ish here. We could buy 10 of these. So we could buy 10 for $5, okay, which is the goal here on this particular trade. So we're going to buy 10 for 5, and then we're going to sell 10 for 10. Okay, that 10 for 10 that we sell will pay for the ones we just bought back, as well as adding these new puts in. So let's do this as 2 separate trades. I think this is good. I'm going to put it in for 505. We'll see if we get filled. Oh, did I end it as a credit? Yeah, I'm so used to trading credits that I forgot. So I actually want to buy these at a debit. Sorry about that. Let's just look at these. Sorry, wrong trade. All right, so we want to buy these for about 460. I don't really want to spend. If I can spend 505, I'll do it. Let's see. All right, we're going to spend $5.10. Close enough. So $5.10 to buy the next tranche of long puts for our butterfly version, which we're going to keep this thing alive for now. So we just did on this one, we just bought the February 28th. Okay, and we bought the 3,700 for $5.10. Okay. So overall here, that trade, cost us about 2,600 bucks in margin to do those. Okay. And it gives us 2,550 bucks on this hedge. Okay, so let's get out of here, back. And now we want to sell something to pay for that. Right? So we're going to go out to the roughly the 150-ish day. We'll do the 144s. I'm going to go to about $10, and we're going to sell this strike here at 4,100. Boy, that's a higher strike than we've had before, but we need 10 of these to pay for it. So we're going to add these on. And 25. So we'll see if we get filled. We might not get filled yet. I'll leave it for a little bit today and we'll see if we get filled. So that's the goal right now, is one way or the other, we're going to get into these the new trade. Everybody good with that? So that's what we've done here today. We just bought 10 of the longs, and we're in the middle of trying to sell 10 at 10. We bought 10 at 5 of the longs, and we're looking to sell 10 at 10 of the shorts to pay for the buyback we just did and the buy we just made. And these will be at the 4,100 strike. So we're going to be somewhere around 10.25 to $10 on these. We'll see which one makes the most sense. And about $7,900, which is not bad. Okay, 7,900 bucks. All right. So there you go. That's helping this regenerating fly hedge. That's solving the problem there. All right. So now we've got to go on and fix these other two. And I don't know that I'm going to add a new tranche yet. I might wait till December 1st if I want to put on a third tranche, but we're going to go to vol hedge number 1. Okay, so vol hedge number 1, which is the January 21st, 2,900 trade. So this is vol hedge number 1. Okay. The goal here on this thing is now we got to close. Yeah, we'll be posting all of this on Discord. All right, so we got to close these, right? And we're going to close them for half, which would have been $5, but we blew past it yesterday. So we're getting a deal here. We're going to make a lot more money than we anticipated. Okay, but it's all good. So let's buy these back. Even though I'm going to buy them at a lower price than the 5, I'm still going to treat them as if I had bought it at 5. I'll just pocket the extra cash. All right, there we go. So we just closed these out here for $3.50. Okay, so $3.50 is what we just sold these for. We're going to close them today. And now I need to open the new tranches. Okay. So for the January 31 hedge, that will give you 30 longs and 10 shorts. It will. Okay. So this is vol hedge number 1. We just bought those back. We're going to assume we bought them back at the 5, even though we bought them back for $3.50. So I made more money than I expected to. I made an extra 1,500 bucks. So sue me. I'll put that towards some bonds. What I want to do now is we got to add more to this vol hedge. So we're going to go out again, same type of a trade. These are going to start to overlap here, which I think is the issue for everybody, but we're going to still do the 113s. I'm going to look for the, you know what, let's do them both in the 113 piece here. So as we do this, we're going to buy 10 of the $5 ones, which we just bought 10 here. This is going to start to really overlap um, here, which is going to make this a little bit messier of a trade. Um, 113 could just go to the March 31st. Squeak, what are you saying? Take the profit and move them both out a cycle. Yeah, this is what I'm doing here, like the 133 here instead. Is that what you're referring to? Doing the 133 instead of 113? Yeah, that's what I'm looking for. So I'm going to take these. In fact, I'm going to do the AM, or let's do stick with the PMs. We're going to run into this problem again in just in about 2 minutes. We're going to run into it again. But yeah, let's do the $5 ones here. So we're going to buy 10 contracts at $5.10. And then I'm going to look to sell. I could sell the 140. I could sell them in the same cycle too. I'm still debating whether I want to keep doing 120 and 150 as the cycles or put them both in like the 120 cycle area. Did I sell them again? Did I just do it again? No, I bought, didn't I? Yeah, I bought. Should be. It looks like this is the working order. Now you guys got me. I got to pay attention. I'm so used to selling. It is hard to buy anything. All right, so yeah, this was the 144-day version. Oh no, it is a sell. All right, let's just see what I just did to myself here. All right, so we got closed on the. I gotta slow it down. Yeah, I think I did it wrong. So I think we just got closed on the wrong piece because I wanted to sell the $10. I knew it that I would get myself in trouble here. See if I can unwind it really quick. Anyway, all right. So the goal here again was in the 104. I know I just messed you guys all up because you're watching me. Okay, so let me unwind what I did. So I bought my 10 here. I forget. I meant to sell my 10, and I accidentally did. I closed the wrong trade. So my bad. Let me fix this thing up quickly here. All right, I'm going to take a little 5 cent hit and fix this thing. All right, so sorry, we got to go back to the fly hedge because I closed the wrong trade. My bad. This is tough on these hedge things, keeping them all straight. So I bought the 10. Here's the buying of the 10. Now I have to sell 10 at $10, which is what screwed me up the last time. Uh, So let's fix these quickly. We're going to sell 10 at 10. So there we go. All right, so this tranche has now been set. So we bought this is to fix the fly version first. So we got to go back. We're fixing this. At the 3700 was me buying or I'm sorry, the 3700 was me buying 10 at 5 and then I sold 10 for 10 to pay for that buy and for closing the other ones. This goes along with the butterfly trade. I'm going to just group them as the regen fly hedge. This is number 3 tranche. Okay. All right. So took care of that one. All right. So let's go back and do the other one now. So sorry about that. I messed everybody up a bit. Messed myself up a bit. And I canceled out a trade that I didn't want to. And what did I get those for? $10. Okay. Perfect. All good. Butterfly done. Now let's go back to vol hedge number 1. I apologize on this thing. So on vol hedge number 1, we just closed the February 28th 3300s for 350. Okay, so that was the one we closed earlier. So now we have to put the new trade on. So we're going to do the same thing we just did with the regenerating fly. It's almost identical. We probably could just keep stacking the same. I think once you get these going, you just increase your contracts and don't worry about the different, trying to keep them separate. I think you just start to um, do them all together because it's really not going to matter whether you have 5 contracts or 10 contracts. Does that make sense? So instead of trying to keep them separate and trying to find um, different days on them, I think you can certainly do that. I think you could just double the contracts. So 134 days is what I did. You could try the 100. Yeah, we're going to do the same thing here. Let's go out to the 144 and we're going to do the same thing. So we're going to buy 5 and we're going to do these in separate orders. So I'm going to look to buy the $5 ones. We're going to buy 10 of these. This is for vol hedge 1. I'm going to buy 10 of these for $4.95. Okay. And while that's working, I'm going to sell 10 at 10. That for now and see. Okay, got part of that done. All right, so on this vol hedge number 1 up here, this is part of that right here. We just sold 10 at 10, and we're waiting to get filled on the buying 5. Okay. All right, makes sense. That's where those are. Here is the vol hedge number 1, tranche 2. Okay. Hopefully this is making sense, or at least how I'm tracking that. So we've got technically, and going back to Stacy's point earlier, I've got 20 longs in this vol hedge plus 10. So I've got 30 longs and 10 shorts. Okay. 30 longs and 10 shorts on that vol hedge. With the regenerating fly, I still have the original 2 wings plus the 10 longs I added to that, which is 20, plus I added another 10 today, so I'm at 30 with 10 shorts. So I've got the regen fly hedge has 30 longs, 10 shorts, and vol hedge number 1 has 30 longs and 10 shorts. And then there's vol hedge number 2, okay, which we'll get to next. So hopefully this is making sense for you. I tripped myself up because I moved on before closing, and I'll have to keep track of it. Bear with me for a second here while I try to keep myself organized. So vol hedge, I've already got it written in here, so I'll know what I did. All right, so vol hedge number two, we've got these 20 longs. Okay, now these 10 shorts, they're at 50%. Okay, so we can take these off as well. So we're going to close these, and we're going to get less than 5 or pay less than 5 for them. And we'll have to walk it up a fraction. Bingo. Okay, so now we just closed these trades. I know I'm running long for you guys here, but let's see. I just closed the 3,300 March 21s. Okay, I just closed those for $4.25. Okay, so we're going to assume 5. I need to put the same thing back on. So the question here is, I'm going to end up putting on this same exact tranche that I already have on. Okay, I'm basically going to put the same trade on. I could move it. I could move it around to try to keep them separate, or I could simply just double the amount that I have in here, and this would be vol hedge 1 and 2. They essentially are going to come together now as a double-sized trade. Does this make sense to everybody? Yes or no? Uh, so I think what I'm going to do is start to just combine them. There's no sense tracking all of the new tranches separately. I'm just going to go back and double what I just did, the 3,400 and the 4,100. So this trade, I'm going to do a similar order. And on this trade, I am going to do another similar order. Oh, sure. Uh, anyway, uh, so you can see I've got 20 of the shorts. I'm waiting to get the 10 longs. So all told, I'll have added, 20 more longs. I'll have gotten rid of 20 shorts and added 20 shorts back in. So today we just got net long by about 30 contracts today. So pretty happy with that. Waiting to get filled on this one. I hate to. We're just going to do it. Okay. I'll just average it together. All right, so we've got these on. So this is actually vol hedge 1 and 2, tranche 2. So vol hedge 1 and 2, this is tranche 2 for both of those. So they're really starting to run together now from a size standpoint. The last thing I want to point out for you guys on this, yeah, just hang on. I'm just trying to make some notes. So Jeff, I will fix everything shortly. Here, let's take a quick look at, and I got to run. Hopefully this has been helpful. I want to take a look at, here is my risk analysis. So let me pull this up. Let's go to here, take a look, and I'm going to share my risk analysis now on this portfolio. Got to reshare. So hang on. Okay, here's the risk analysis on, do I find it easier or better feels doing trades separately? You know what? I did it here. If I'm in two different expirations, Jeff, I find it easier and better fills to do it separately. But since I did them both in the same expiration, I didn't do a 120 day, 150 day. I kind of split the difference and did them both in like that 144 day. So I'm okay. I kind of like that a little bit better, putting them on the same expiration as opposed to spreading them out a bit. So either way, but here's my risk analysis in this account. So this is my main account. Okay. Just giving you guys a sense. If we drop 10%, if the markets go down 20%, I'm at risk for $124,000 at 20% at only a 10% increase in volatility. But because you have all of these new hedges on and so forth, if volatility expands, doubles from here, maybe goes to 30, I'm actually going to make money in every single, whether the markets go up, down. If volatility goes up, I start making a bunch of money. I only lose 17 grand. Okay? And the only reason without volatility that I'm actually losing money, okay, if vol goes up 20% from 15, so vol goes to 18, okay, it's 100, I lose 110 grand, but I'm okay. But essentially, that is all coming from uh, this down here, this December 5th one. That is the calendar put. That's almost coming out. So it's a $142,000 loss. That's where pretty much all the danger is right now, is in that trade. And I'm okay with only having one of these on. I'm fine because if volatility spikes up to 30, if volatility goes to 40, I start to make like $100,000 or so because of the vol hedge. So the vol hedges are now doing their thing. I have no fear of a volatility spike at all. Okay, volatility is no longer a factor for me. So the only factor now would be the only way I can lose money is if volatility does nothing and we sell off 20%. It's the only way I'm going to lose any decent amount of money. Otherwise, we're in pretty good shape overall. And if we get a slow grind down, okay, it's all this one contract, which is what we expect. And so I hope that makes sense for everybody, but we've really fixed our volatility problem completely out there. Anything else to cover while I got it today? Oh, if we want to do like a calendar trade today, I don't love the fact that we're up a bunch of money today. Well, I mean, I love the fact that we're up a bunch of money. I mean, my positions are up $8,000, $10,000 today. That's great. The net lick is. We've cleaned up a bunch of trades. But what if we want to do another calendar 112? First thing we do on this is we're going to go out about 150 days. So I'm going to take that 144 and I'm going to put on like 100 wide. And for me, I would like to get to spend about $10. So if we're doing it the normal, like 24, 25-ish delta, it's a little more expensive than I like. I'm going to drop it down just a fraction here. I mean, you're still at 5,600, which is only 300 points from here before we hit a 100 wide trap. That's not bad. Okay, I'm going to go down just a bit more, 55. So if we drop 400 points, this thing starts paying off anyway. So I'm going to go around $10 on 100 wide for the put debit spread. I'm just going to place this order. And I'm going to let that thing sit and think about itself for a minute. Then I'm going to go out, and I like, again, 45 to 60 days personally is what I like. I know Igor's doing 30. I think that's too short for me, and I found I have better results at 60. I have better results at 45, and there's better backtest results at 60 on those naked puts, and I can get a little farther away. So let's go to like go to 54 and just see what we can find. I want to find something around $15, which is this one here. And this is the one I'm going to sell 6 of. Oh, you know what? I only did 1 of the others, so we'll go back and fix that. Okay, I'm going to sell 6 of these at around 15. Okay, so 6 of these at 15, which is the 53.90. I'm going to let that sit for a minute while I go back and fix the other one. Okay, so those six are working right now. I'll see if I get my credit on that and then my 100 wide. I wanted to do three of these, not one contract. So, all right, so that's the play right now. So I'm looking to put on another uh, calendarized 112 here. I'm going to go 54 days on this. 60 days is about my sweet spot. So I'm going to go 54 days. There is a 57 DTE. I could have done that one as well. Uh, what would that have looked like? Um, here, I could drop to 53.75 here, which is a little bit lower. I could even drop to 53.50 and get close. Not bad. Let's try. Let's actually try for this one instead. And I'll tell you why I just did this. So, all right. So what I did was instead of doing the 54 day at 53.90, I'm canceling that out. I went to 53.50 um, on it. So I got a little bit further down in 4 days more. It's close to 60 days. That's the trade. Okay. Hopefully this makes sense to everybody that that would be the trade we're looking for. So we did a bunch of work. I will clean this activity up. I know it's a lot. I think we start combining these vol hedges because we're going to be duplicating the um, the strikes because we have multiple tranches on. So I think I'm just going to be doubling the size and combining them into one hedge moving forward. Uh, but you can see from a volatility standpoint, hedge-wise, I'm well hedged for a volatility event. So I'm really not worried about volatility at all here. Now I just have to keep an eye on what will happen to the account in the case of a delta move. But I've got all those put debit spreads sitting out there to take advantage of. I have a bunch in here. I have also these hedges will also help on the delta side. The calendarized FB trade is going to help. We still have 71 days on that. We've got a lot of time left on these other put debit spreads, and we've been moving to 100 wides on these. So we're moving to 100 wide on these particular trades, which I think is good. All right, I think that's enough for today. I know it was a lot of wrangling and a lot of things going on, but I like where we are on that. And the lazy trader account, I don't want to spend any time here. Maybe we'll do something tomorrow or so, but I don't have a whole lot to do. All of our SPY puts, six of them came off. I'm only sitting on three now. In fact, I need to get a profit order put in on one of these. This one doesn't have 30% on it. All right, so I just put my 30% orders in on these. I've got one at 26, one at 28, and one at 25. They could all come off if we have any more rally than the rest of this week. I might be out of SPY trades. We booked yesterday alone in this account. We booked over almost $8,000 in realized gains yesterday. A lot of that was SPY. Some of that was a put credit spread in ARM yesterday. So there was a couple of different trades. And then there was also the XLE poor man's covered call, which I closed the whole thing down for an overall winner. I'm just keeping the account a little cleaner with that. Oh, TMF covered call. I have one. I already have a TMF covered call on this. So there is a, Nick, there is a TMF covered call. That was put on 6 days ago. So that, oh, you mean taking it off? Sorry. You're right. I said I was going to take this thing off. It's at almost 90%, sitting at 6 cents. Yeah, 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 yeah. Sorry. I'm going to put an order in. It's going to probably fuss me a little bit here. 85%. 85% in 6 days. Still not bad. Let's just do it. Let's take it off. Boom. All right, so we just made money on that covered call on TMF, and we've got 800 shares. We might as well just do it again. Okay, so let's go out about 30 days to December 6th. Um, I was doing 57, I believe, on these. Okay, I was 54. I was at the 54. I had done this one at 54. Okay, so if we do something similar, keep it around 54 times, what do we say? We have 8 contracts. Okay, we're going to book another 336 bucks. I think 54 is a good spot to be at here. I own them at 57. Okay, I don't think we're getting there tomorrow, but we got 30 days. I could probably tighten this up a bit. I could maybe go to the 33s. Or let's go with 33s. What the heck? Let's do that. 400 bucks. Yeah, done. All right, so we just took ours off for a profit in 6 days, and we just booked a whole nother covered call on here for another 400 bucks. Okay, that's quite a ways up. So we'll see how that goes. I'm gonna run out of time. I also want to do something with these TLT, selling some calls as well. So I've only got two of them that are, one's almost flat. This one's in the money by $1. I don't really care about these. I'm fine with these TLTs, but if we wanted to, we totally have about 40 contracts of TLT. We could do something similar. Let's look at December 6th. 40 contracts. Let's go to 95 for now. And if we did 40 contracts of these, which means all of those would be in the money or would be out of the money and moving higher for this thing to even get challenged, we're going to book 1,400 bucks in cash. I like doing around this 15-ish delta or 20-ish delta. I could do the 94 and a halves, maybe, which puts me right at 20 delta, which is at 95. That would make all of these in the, profitable by anywhere from $5 to $8 in the money or there. So let's do this too. So let's sell 40 of these. This is also going to help our buying power. So against these leap puts, which we don't own, okay, we're just turning these all into a massive crazy ass big strangle with 4 different put legs and 1 call leg to it. So we just added this thing. Let's group it, and we're just going to do naked call on all positions. Okay. So we're going to add that 1,700 bucks. If we get 50%, we'll take it. If we get more, we'll take that too. Hopefully this made sense for you to do that. So I don't think I'm going to do much else. So we've got TMF covered. We just keep generating cash on these things. Nothing else to close. My Qs. This was a shorter term trade. This was only a 30-day trade. I wanted to try to get assigned. Well, that's not looking like it's happening. Okay, I'm up 82% in 8 days. It's very likely that I will probably close these out here or shortly and reestablish. I want assignment. I want to get assigned at 460. That's where I feel the value is on the Qs. I'm not going to do anything above that. I do want to get assigned on these as well on the small caps at 30. Okay. I'm up 50% on these. So everything here is moving really, really, really well. Nvidia, I would love to get assigned at 95. Well, that ain't probably happening unless the earnings are terrible. So we'll probably have to close those. And then VOO, same thing. I want to get assigned at 450, which is where I think the S&P value is on these. We're up 62% in 23 days. So this account is just on fire, doing great. Uh, so I hope these things all help you guys. Have a great rest of your day, everybody. I'm gonna jump off here, get ready for another meeting, and we'll get this thing posted within the hour. All right, have a great day, everyone. See you guys all later.